Hello, everyone. Today is the second in a series of videos that I'm making with mortgage broker Jason Walton. And today we're going to discuss a temporary rate buy down, what that means and why you might want to do it. So, Jason, what is a temporary rate buy down and why might a home buyer want to consider this option?
Yeah, hey, thanks, Sarah, and good morning to
Good morning.
everyone. So a temporary rate buy down is, for example, if you were to call me today and you want to quote for an interest rate on, let's say, a conventional loan with 20% down, this morning it was, we'll say 6.875%. So that would be the number we'd be working from. So the 2-1 buy down is actually the two stands for 2% less than what the rate is, and the one would be the same. So the first year you would actually be paying 4.875 on your mortgage. And then the next year it would go to 1%. So then it would roll to a 5.875. And then after that year expires, it would roll to the original rate, which was the 6.875. Now, of course, in that process, at any time, let's say the market were to have a significant drop and you're like, you know what, I want to risk it going up 1%, you can always refinance and then get that rate. But at that point, your buy down would be no more, and it would be whatever your current uh, mortgage rate contract is.
Okay, very good. So now here's a question we really haven't discussed, but does it affect the amortization schedule? And if so, how? I mean, I
It
know
does
you
not.
talked about what you're paying each year, but
It's a great question because people are probably thinking of it and kind of aligning it with a like a refinance, but that's not how it is. The way that it is structured, it would be a 30-year note, and it would just automatically roll. There would just be triggers inside the system that once you hit that 1 year, then it would go to the one. So you would then owe 29 years, and then when that other year expires, then you would be at 28 years. So that does not affect the amortization. The only time it would affect it is if you refinance.
okay, right. Okay, very good. Thank you. So now on our first interview, we discussed a product that you offer. It's a buy now, refinance later, and that if you do that by the end of this year, 2023, that you will waive your fees to refinance after 12 months. And if rates go down, then the third party fees would still apply, but your fees would be waived. Would a buyer be able to combine the temporary rate buy down with the buy now, refi later option that I just described?
Yeah, absolutely. So what we would do is we would structure the loan on the 2-1 buy down, and then
Okay.
um, if they wanted to refinance, if you did so you have to be 12 months paying the note and current.
Mhm.
So you have to at least hold that product
Mhm.
for 1 year.
Yeah.
But then after that, if you want to refinance, then yes, we would incorporate the same thing. We waive the origination fee and the processing fee.
Okay. Very good. And so now finally, today is Wednesday, November 15th, 2023. And I want to ask if you could kind of tell us what current mortgage rates look like right now.
So this morning, yesterday, and on November the 14th, when we got up, we were all excited because we seen an
Mhm.
improvement in the market,
Mhm.
nearly 100 basis points. And so what that means is, if something was at 7.5, then we could have been in, make me do math in my head, uh, 7.25, something like that.
Mhm.
um, so we're all excited, and the day went. I ended up quoting rates, and then it continued throughout the day with rates improving because of the consumer price index. They had seen an improvement in that. So this morning I got up and I quoted, and the conventionals was on a 30-year with 20% down was 6.875. The
Mhm.
FHA was 6.25, VA was 6.5, and USDA was 6.375. So that's a
Wow.
significant, if you think about it, last week and just a few
Mhm.
weeks back when we were hanging around the eights, pretty
Yeah,
consistent. So that's a
right.
significant drop.
That is significant. Okay, so I'm hearing though and seeing that buyers seem to be gaining interest, and I think it's those that are already connected with a lender, and those lenders are saying, "Hey, look at these rates." So if you're out there and you're not actively looking, you're not actively working with a mortgage lender, and you didn't know that, then please take note because rates are dropping. So that's exciting. We have no guarantees what's going to happen going forward, but we do know we're seeing some relief right now. Okay, and I guess we're going to wrap it up for today, but we're going to do a series of videos. So we'll be back with Jason. Thank you for sharing with us today. And the next time, we're going to talk about specific steps that a potential home buyer needs to do in order to prepare to make a home purchase. So I think that's very helpful because sometimes people think, I want to buy a house, and they have no clue where to begin. So that's what we're going to talk about next time. Do you have any final words for our audience today?
Just probably one of it's always going to be a parting comment is if you go back and you look at then versus now, there were people back in the 70s when interest rates were 7, 8%, and they're saying, well, I'm going to wait for rates to drop. Well, you would have been waiting 20 years. And so
Yes.
we're in the same situation. It's fluid, things move. And so if you want to buy a house, now's the time to buy. You can always refinance later.
So true. So true. And very good. Good points to consider. Thank you, Jason.
Thank you.